Good afternoon, ladies and gentlemen. Welcome to another episode of Finance Junkies. My co-hosts are not here yet. They should be here soon, and then we'll all publicly scold them for being late to Finance Junkies, the newest show in the financial markets and the equity markets. I'm here because we got to start the show. Thank you, 49 people, for being here. We're just going to chill for the next couple minutes until these guys get in here. And then we'll get started. George with the J, what's up? Steve W, Mr. Seymour Duck, Billy Jack, Imnot, Persian Prince, Heinze, Mark. Thank you all for being here. Here we go. Here's one of the fellows. What's up, Chris? How are you?
Sup.
How you doing, man?
I think I'm going through a midlife crisis.
Why? What happened? I want to hear this.
Nothing, dude. It's just overall, I'm just, I'm getting to the point where I know. I love you too. I'm getting to the point where I'm like I'm getting closer to the 40s. So it's like, oh, you know what? The average lifespan of a human is like 80. So I'm like a little bit below that midway mark. And so like it got me thinking of a lot of the life experiences that I've had over the last, 40 years. Well, not 40, 30, 38 years. And yeah, it's just interesting.
Why today? What happened today that made you? Was it super random, or did something happen to get you to think?
No, nothing. It was like last night. I was actually I logged onto Facebook last night, and so you forget that like I was a lot more active. I'm sure that people my age were probably a lot more active when they were younger, when they were on Facebook. So I kind of started to look back at a lot of the stuff that I had done, and like it just reminds you of like, okay, where did I go right? Where did I go wrong? If I could have done this differently, what would I have done? And so, it's just a whole lot of memories of people and places and things. And I would say that I wouldn't change anything that I did in my past, but I wish I was as smart as I am today as I was back then. Like I realized, like one of the things that I think I learned a lot was the number of friends doesn't matter nearly as much as the quality of friends. Like I'd rather have 5 good, solid quality friends rather than 100 just, like acquaintances. And so in the past I was like, oh, I want to get as many people to like me as possible. And now I'm just like
be popular and all that.
Yeah. Like what do I like? And the thing is, popularity has a price. And it's really hard. Like you commit so much time to doing X, Y, and Z, and you forget about the people that tend to matter the most in your life. And the real friends.
But why last night did you log on Facebook? What, like,
because I had nothing to do. Bored? I was just bored. I was like, let me just go check out.
You went down memory lane and you just started looking at everything.
Yeah.
It's really interesting. Let's think on this for like a second. I think Carlos will be here in a minute. And then, guys, we're going to talk about Disney today, Uber, HIMS, Robinhood. Thank you, 126 people, for being here. We have a lot to talk about. We're just talking about Chris's midlife crisis today that he kind of felt last night. Yeah. Did you think, okay, because I think the concept of midlife crisis is incredibly interesting because you're going to be 40 soon. Most people, the average male lives to be 72, right? I'm just got past more than 33% of my life, right? Because I just got past 25. So all of us are getting to that point where, inevitably we're going to die. It's going to happen. Did you ever think that by 38 or 35 or 40, whatever, you would have a voice that people care about? You have 8,000 people that follow you on Twitter. You have hundreds of people subscribe to you on Patreon. Chris's Patreon now is like, 200-300 subscribers. You have people that watch you every day. Did you think you would be that person that people actually care about in terms of your opinion, even if it's in the world of stocks, right? But they care about what you have to say. Because this happened relatively within the past year, right?
I mean, I didn't really think that I had it in me to do this, to be honest with you. And to some degree, I still feel that way. Like, hey, is this just a fluke? Because it all feels like a surprise. But I would say some part of it I'm enjoying and some part of it I'm not, And so you have to take the good with the bad and go that route, Like I like seeing people when people make money and they're enjoying themselves and they're like, yay, everything is great. But I also am finding it, sometimes if you go against what they believe, they get really animated very quickly. So I'm just like, should I only share the positives and not the negatives? Because maybe that is what, keeps everyone somewhat grounded, So.
But overall, you are happy that before you've died, you've had the ability to have an outsized impact on people. Because like I'm grateful every day that like, you know, people kind of care about what I might have to say, right? Like
Yeah,
that's
of
it's a
course.
cool feeling,
Of course.
you know, to have a
Yeah,
little
of
bit of
course, man.
influence. People, you know, get your thoughts out there. It's something a lot of people never do because a lot of people don't want to make content. A lot of people, and it's been a grind. I mean, you and me have been through this from the beginning, right? We started when both of us were at
Yeah.
zero and we started building. So
Yeah, I would say that it's like a relief valve sometimes where like you have so many thoughts running through your brain and things that you want to just say to the world, but you know, in this day and age, like you don't hang out with friends nearly as much anymore. You know, so you kind of let things out in small doses on different media like platforms, right? So like here's an
yeah,
example. I don't have the habit of just calling a random friend, be like, hey bro, what are you doing? Let's talk about life. But that's what we're doing right now, technically, with like a whole bunch of people watching
with
us at the same
182
time.
people, bro, that's still crazy. Like, can you believe that? Like, you and me are just having a conversation right now, and there's people
Yeah.
in Minnesota, in Wisconsin, in Singapore that are on the toilet. They're on the, you know, they're sitting, they're drinking some beer, and they're just watching us talk because they get some value. Like, that shit is insane to me.
Well,
It's
I think
crazy.
it's because I think it's so many people can relate to it. You know, I'm
Yes.
sure that there's
Yeah.
people in my age group that are feeling that same, you know, that same energy right now too. They're seeing everything happening in the world and saying, "Hey, I'm at this point in my life. Like, what have I done? What have I accomplished? What can I accomplish going further? You know, like I have a limited amount of time to do more, you know." So it's one of those things that like every I don't know about women because I'm not a woman, but every man probably at this age probably starts to struggle a little bit with this, you know,
Yeah.
because like
Yeah.
you start to feel that expiration date coming, you know, whereas in
Yes.
your 20s
Yeah.
there is no expiration. There is no expiration in your 20s. Like you're going to live forever. And now I'm starting to see, and you know what really like set it like really low? The other day, I was like, you know what? I am gonna not shave for the entire month of November, and I'm gonna see my beard grow out because I've never really had like a full beard, but I want to do a full beard just to see what it looks like. And within like 2 days, I noticed so many grays, and I was just like, nah,
Yeah.
I look like fucking Gandalf, bro. I can't do it. I can't do it.
Dude, I
Yeah.
notice gray hairs as well. I mean, I get a little couple here and there. It's not a lot, but it's some here and there.
Listen,
I
when you
think I
start, yeah,
go
when
ahead.
you start to see gray ball hairs, that's when you need to like, what the hell
Yeah,
is going on, bro?
yeah.
Yeah.
Look, I think it's
Yeah.
we're going to move on to stocks now, but it's an incredibly valuable discussion. Most of our audience is in their, I would say, 30s to 50s. You know, we don't really have that young of an audience, and death is something that we all have to deal with. It is coming for all of us. No one can escape it. People think it's a taboo discussion. Like, what the fuck is taboo about it? We're all gonna fucking die. There's no taboo. Like, it's gonna happen. We're gonna be gone. I know it's a tough discussion, but trying to make the most out of it and do something before it's all over is, you know, I think the journey of life. And so it's fun to talk on that sometimes. Speaking of things that were dying that seem to be a little bit alive today, and this actually works well with the tweet I did. I said the mouse is alive. Disney, ladies and gentlemen, up 3% after hours. Stocks at 86, still at 2014 lows because they beat on revenue. Disney Plus subscribers added 7 million more subscribers, beat by 2 million versus what the street expected, and then 12 cents per share they beat on EPS. I watched a little bit of Bob Iger on CNBC basically say they're figuring out ESPN monetization, free cash flows going back to strong levels, and overall they are ahead of schedule in terms of where they wanted to be on the fiscal responsibility of what they're doing with the company. Kris, you've been bullish on Disney for a while. You've liked this company for a while since the summer. You gave us the bull case. Did this earnings highlight anything exciting for you?
No, I mean the work is continuing. That's the best part. Like when you see the business starting to transform and going in the direction that you need it to go in order to like to fulfill the thesis that you have, it's always good. So, you know, whenever I look at companies and I see that they've fallen off tremendously, I ask myself, okay, what are some of the things that caused this company to fall off? And was it the company's fault or is it something that's more macro related? And then after that, you kind of like see what management says. Like, how is management responding to this new normal? And once, you know, once they give you an idea that, hey, this is why we failed, this is what we're going to do to correct, and this is how we're going to get there, now is the time to show. And every time that these guys show that they're executing on their plan, it just means that, you know, it's confirming the thesis that you have. So all the DD work that I did and I posted, you know, it's starting to come to fruition right now. So you're starting to see that slowly make its way into the business. And I think that's going to be the key, right? Because at the end of the day, with Disney, for all the things it is in terms of cultural icon and all the other stuff, it's still a business. And so the business is improving, and it's improving in the right direction. So that's what you want to see. And I think fundamentally they are very undervalued from where they should be trading currently. But I do see why they are where they are, because there are still a lot of questions that need to be answered. But I think overall the media landscape is changing in the positive cash flow direction. So, we had the streaming wars over the last like 5 years, where a lot of people started doing cord cutting and moving away from traditional linear to streaming. And so the only companies that's been able to figure out how to actually make money has been Netflix. And so watching Disney do its thing with DTC, which has been their key weakness, they're doing all the right things. So hopefully they can replicate that same success that Netflix has, because they do have a lot of strong IP. I like some of the commentary about Bob Iger made, which was that they're not going to go for quantity, they're going to actually go for quality. Like, don't just spend money on stupid projects. Like, no, like actually dedicate your time to things that people want, and hopefully they have some future successes. I'm looking forward to some of the new movies that are coming out. Particularly, I'm going to be looking forward to Deadpool with Wolverine. I think it's going to be amazing. So we'll see what happens.
What do you think about the 7 million in Disney Plus subscribers? I personally think that there's no good Disney Plus content, but why do you think people are subscribing?
I mean, a lot of that stuff is going to be very subjective. People are going to, like, you have to remember there's 8 billion people on this planet. Okay. So not everyone has the same taste as Amit Kukreja. Like, I hate snails, but I'm sure that there's a group of people that love snails, right? So the key is, can these guys make content that's broad enough to appeal to the masses? And can they create an entire library full so there's something for somebody? So that's one of the things I like about Netflix, because Netflix has so much variety. Disney does not, but Disney also has some really, really like nostalgic things that can appeal to a lot of people. So as an example of something that I personally love, like, even though I don't watch Disney all the time, is Bluey. I know a lot of parents, they love Bluey. Like, I don't know if you remember, I was talking about it.
You told me about it. Yeah, I never got into Blue, even though Blue is my favorite color, but I never, watched it.
Bluey is just this amazing Australian cartoon, but it's on Disney Plus, and so people tune into it. So anyone with a kid is like, oh, you know what? I want my kid to watch some wholesome content, and Bluey seems to fulfill that role. So they are subscribed to Disney Plus for it.
Jed Luke says, Mick keeps asking about what's to watch on Disney, Star Wars, Marvel, Mickey, National Geographic. See, when people say this stuff, I just, like, in the moment, I can't, like, my content needs are so hypersensitive to the moment. Star Wars is that thing, like, maybe during Christmas break, I'll watch it with a cousin, but I can't just watch it on a random Tuesday, So I guess for me, that's why it's a little bit tougher. I did like Mr. Seymour Duck says Disney and Hulu is going to be in one app together. They acquired Hulu from Comcast.
Yeah.
Your quick thoughts on that, Chris, and them integrating mature content from Hulu and all the Disney Plus stuff together, and what that could mean for growth of the business.
Yeah, the bundling aspect is going to help drive growth and engagement. The other thing is targeted advertising. I think moving from purely subscription-based to advertising does help significantly, because it does subsidize the cost of a lot of people's viewing. So, imagine right now you have to pay, $15 a month for Disney Plus content. The value proposition may not be there, but if it's only like $7, but you might have to watch a couple of ads here and there, the value, gets added significantly. So if you think about it, if they can layer on targeted advertising, they can increase that ARPU significantly. And so what ends up happening is you're getting the money from the subscription part, but then you're also adding to the value per user, because you're adding that layer of that targeted advertising on top of it. So your margins tend to improve. So the value proposition for what Disney is doing right now is they're raising prices on the ad-free version, but what that is doing is kind of pushing people into the ad version, right? And the ad version probably monetizes at a higher rate than what they would have got with just a flat fee, what they were doing. So I think they initially went after growth, they just overspent on content, and now that they're kind of like entrenched a little bit into so many homes, they're cutting back on capex for content and instead focusing on profitability. And so hopefully that, according to their projections, DTC is going to be profitable by Q4 of next year. So like this time next year, DTC, which right now still loses about 300 million a quarter, is going to be down to, negative. I mean, is going to be down to zero or free cash flow positive. On top of it, their parks and recreations business is just gangbusters. They're doing exceptionally well. Q4, like next year and the year after that, they're launching 3 new cruise ships. Disney cruises are very popular among people with families. So I think all these things kind of just add to the value of Disney long term. And so at current prices, it's very undervalued, But once again, the thesis, it's not going to be a quick turnaround play where it's just going to shoot back up to like the $200 mark, like Google or Amazon or Facebook, where they can actually make cuts and then see the improvements in margins right away. It's going to take some time to get there, but this is what investing is all about: time, figuring out the time horizon, letting the management do its thing to execute on the vision. And they've brought on some very good key leaders. They brought back Kevin Meyer and Tom Sags, who were originally part of the Disney family, who were instrumental in some of their early successes. And hopefully they actually do some good work on putting a transitional CEO after Bob Iger leaves. I think this is one of the biggest challenges for Disney.
Yeah, because the other Bob Iger gave him Disney at the top at like $200, right, in March 2021, and he fucked it up. Now, granted, the market was falling as well, so it's a tough position to be in, right? But I guess Iger really wanted to save his legacy because he 5x Disney over 15 years, and he didn't want to see that go away.
Yeah, I mean, I don't know how to best describe it, but I think to some degree Bob Chapek does get a lot of blame that he may not deserve. I mean, some of it he definitely deserves. Don't get me wrong. Like, he could have handled things a lot better. Like, from what I'm hearing, he wasn't exactly the best leader when it came to parks and all the other stuff too. And the fact that they lost Kevin Meyer and Tom Sags kind of like just it was a bad move for Disney. I'm not sure what the exact causes and the reasoning were, but losing key executives that helped you build like this giant business was a really bad move on Disney's part. Bob Chapek just got handed a really, really raw deal. I'm not saying he was a great leader to begin with, but when you have a situation like COVID hit you right after you take over and all your like a large segment of your business gets completely shut down, it's hard to recover from that. It's not something that happens overnight. And Disney is recovering. International business is growing pretty significantly, so they're returning back to the new normal. The key is the free cash flow and the operating income. Disney's free cash flow projections for next year are just way beyond what even the most optimistic analysts were saying. And I think with free cash flow, it gives value to shareholders because it gives the company optionality to do more, right? So as an example, they could do buybacks, they could reinstate a dividend, which provides value to shareholders who are long time relied on that Disney dividend. So these are the kinds of things that I'm looking forward to seeing over the next couple of years. And so, I continue to be bullish on Disney long term. I will say that my growth prospects for Disney, based on just how much more limited some of the impacts of like the recession are going to be, is I would say I'm dialing back a little bit of optimism. I'm not saying a lot, but if you were to ask me about 6 months ago, I would have been a lot more optimistic. But now with everything happening and the recession like upon us, I think it's going to take a much longer time frame to play out. And you know me, I'm a mercenary. So at the end of the day, this is not the quick fix that like typically like excites me. So we'll see.
Yeah, let me put Chris on the left. Sorry about that. I forgot Chris was on the right side. Kelly brings up a good point. Not enough obscure foreign dating shows on Disney Plus for a minute. Let me put you guys on some game right now, okay? There is a dating show on YouTube. It's called Views from the Six. And this dating show is South Korean Australians. Okay, I don't know how it popped up into my feed, but this is why Google, I like Kris's Google thesis over YouTube a little bit more, because this freaking dating show, they get these random South Korean, they don't always have to be South Korean, but a lot of them are South Korean in Australia. They put them together. Episodes are 9 minutes each. It's a quick watch. It's highly edited, and the numbers are crazy. I mean, they're doing hundreds of thousands of views per episode, and they started a month ago. And to me, this is the beauty of Google. This is the beauty of YouTube. This is the beauty of user-generated content. Because Love is Blind costs God knows how many millions for Netflix to produce, and it's trash. Whereas this is like from random people in Australia, and the content's really good. So I think, Kris, your point for why you're not as optimistic for Disney is you're seeing the UGC revolution go a little bit higher as well. And in a recession, more people will watch free YouTube versus have to pay for something like ESPN all the time.
Yeah, I mean, there's still going to be a large segment of the population that tunes into their favorite TV shows and everything, but just there's a lot more competition from the likes of guys like us and YouTube, and you know, it's all about a competition for eyeballs. So the more content that exists, that means that the more time you're trying to compete against someone else. So like Mr. Beast, you watched his last video. That was a really interesting video. By the way, we should probably talk about that.
Can we talk about that for? Let's do a little quick B segue. Then we're going to Robinhood. Okay, Robinhood's next. I don't know where Carlos is. He's probably. Should we call Carlos live too and see if we can? We should do that. Let's call Carlos real quick. He might be sleeping. We might be able to wake him up. But we can talk Mr. Beast as well. So let me set it up. Mr. Beast put up a video, basically donating wells in Africa, in Kenya, I believe. And he built like 90 million of them. Some crazy thing he did. I don't watch the video.
It wasn't a lot, but it supports almost like 500,000 people. It gives them clean drinking water.
Okay, so he gave clean drinking water to 500,000 people, and people have said this is racist or something. What's going on? Why do you think this is happening?
Unfortunately, Mr. Beast is dealing with something that I think society is overall is just society is becoming more and more fucking cancerous by the day, man. And sometimes that's why, like today, I tweeted something, and I'm just like, I'm so over like how things are. So, Mr. Beast, of course, is a white guy, right? He's got a lot of money. He does a lot of philanthropic activities. And so instead of looking at the net positive benefit to the people are saying, well, look, because he's white, what he did was wrong because it shows the ineptitude of the local government, which, you know, of course, is black in Africa, to not provide for their people. So he's basically highlighting their ineptitude. And so that is racist. I'm lost by that. I'm fucking lost by it, dude. Like, if
so they said the Kenyan government has done a bad job at supplying water for its citizens.
They have. These motherfuckers have. But you know what? It doesn't matter if the government is black or that. There's plenty of countries on this planet that have white leaders that do a shitty job of their fucking like running their country. Plenty in Asia, same thing. So it's not like this is unique. He just picked a country that needed improvement, and automatically people are assuming that, hey, this guy has malintent behind his deeds. I mean, it's also. Did you see the one with the one where he gave
the blind people thing?
Yeah, the blind people thing. People were like, "Oh, it shows how the American was it just American, but like the international healthcare system is fucked up." And it's like, bro, come on, man. Like, this is the kind of stuff. It really. I don't know what to say, man. You can't even do philanthropy anymore without getting criticized. That's where we are in this fucking cycle, bro.
I think a lot of people care about the means to the ends versus the ends in and of themselves. And the ends are, meaning the process of the event, people got more drinking water, which is good. Did he make a YouTube video about it? Sure. They spent a lot of money to do that, and they probably made some money from the YouTube video doing that. But if you know Mr. Beast, you know he's a good soul. He has so much. He has a whole channel called Beast Philanthropy. The means to the ends, people may criticize that as white savior complex, whatever. I'm getting to a point in my life where I don't give a fuck. Like, did people get clean drinking water or not? Yes. Okay, good. That's fine. It's like if you give a homeless person 20, like I would never make a video of me giving a homeless person $20. I've done that many times in the past. I would never publicize that because I just don't like doing that. But if I did do it, and like, does it matter that much if the guy got $20, right? And he doesn't give a shit. He's like, all right, put it on YouTube. I don't care, right? For me, I wouldn't feel the best. I don't want to show that to the world. But that doesn't mean it's a bad thing to do. And if anything, if it gives more exposure to the cause, then it could have a compounding effect, you know?
Yeah, and I
So
hope this shames the Kenyan government into doing this more, saying, look, the one thing we don't want is more philanthropists coming in and doing like, first of all, I'm a believer in the saying by Mahatma Gandhi, you know, be the change you want to see in the world. Like,
yeah.
this is not the first philanthropic project that Mr. Beast has done. You know, there's plenty of things like cleaning, like clean oceans. You remember that? Planting trees. Like, what's more noble than improving society? Yet everyone is focusing on the guy's skin color as the primary thing. It's just stupid, man. Whatever. You know, it just goes to show that there's going to be naysayers. You just have to like Mr. Beast at this point just has to get used to this and just be like, fuck this. At the end of the day, I care about the mission. If the detractors want to say something, that's their problem, not mine. You know.
Yeah, dude, my sister's dealing with the same thing. Not to get too much off tangent, but she's a teacher, and in her district, the district has gone through some controversy. Her name has popped up in a couple of articles, even though she has nothing to do with it. And like, she's like freaking out over the past couple of weeks, like, yo, like they're publishing these articles about me. And I'm looking at her like, dude, you know how many fucking YouTube videos use my face in the thumbnail when Palantir was at 6, saying I was the biggest grifter in the world, all this type of stuff. It's like, you get used to this stuff. But she's like, I'm not you. I can't deal with that. I don't know how, like, 100 people might read that article and they're going to see my name. And I'm trying to like mentor her around it. She's 30 years old. I'm 26. Like, it's not that big of a deal. Like it doesn't matter. In the broad scheme of things, you know, you're not a bad person, right? Like, I know I'm not trying to grift people, so they can say whatever they want, but it's hard to deal with that when the whole world is watching, you know?
Yeah.
All right, let's go to Robinhood. Robinhood. They had earnings yesterday and stock is down 15% today. I was a net buyer of the dip, not a lot of the dip. I convinced Kelly to buy 200 shares, even though I never said 200 shares. She just ended up buying 200 shares, and I bought about 20 shares today. The big thing here, average revenue per user, assets under custody is 87 billion. It's up 34% year over year. Net cumulative funded accounts, 23.3 million. MAUs are down 16% to 10.3 million. Net deposits are up 4 billion, up 18% year over year. And total net revenues were 467 million. The net interest income, because they have 5 billion in cash, yielded them $251 million. Their transaction revenues decreased 11%, only 185 million. And crypto was down to 20 million. It was down 55%. So I think the key takeaway, and then Chris, I want to know what you think about this. Their users are decreasing, but the users are depositing more money in the platform. I mean, they have like $4 billion more year over year into the platform. And the ARPU is going up, the average revenue per user, which means those users are becoming more sticky. They're doing more stuff on the platform, even though the total usage is going down. Robinhood has $5 billion in cash. They trade at a $7.2 billion market cap. What do you think about the future of this company from a brokerage perspective, from a valuation perspective, because you're very good at analyzing valuation, and they're expanding to the UK by the end of the year? Do you think that has any trajectory for some real deep value in Robinhood?
I mean, you're trading you're trading for cash value. I don't even know how to explain it beyond that. It's crazy. So I don't know. I really don't know why it's even sold off this much, to be honest with you. I mean, yeah, I mean, some of their segments are declining in rev, but dude, the book value is so juicy. I mean, I don't know. I have to do more of a deep dive into Robinhood to really like it. I love their platform, by the way. Like, for options trading, it's a great platform. It simplifies things significantly, especially compared to some of the other things that are a lot more complicated. It does gamify a little bit, so that is a little bit worrisome. But you know what it comes down to, Amit, and this is probably why a lot of major investors don't necessarily see the value in it. It's the regulatory framework that may hamper them in the future. So right now, their core business is that order flow, you know, like payment for order flow. What happens if that disappears? So that's the question that we have to all ask ourselves. Like, okay, like, what kind of business model does Robinhood have if payment for order flow disappears? And I know there's legislations on kind of like stopping that. So that's just a very superficial thought that I had about it. I definitely need to do way more research into Robinhood, especially now that its valuation has dropped so much. It could fall into my wheelhouse. So we'll see.
Yeah, and look, Chris says, Chris Melendez, Robinhood is just a trading platform. It is, but it's one of the better trading platforms that's out there at a really cheap valuation. I think the reason people hate it so much is because of what happened with GameStop in 2021. I mean, the amount of tweets I got today saying like they'll never forgive Vlad for that. Do you, Chris, have any thoughts on that whole Citadel situation? Do you blame the company for that? Do you think it should be held against them?
I mean, I don't know, man. Like, there's so many things in the background that happened. It definitely was a PR hit on Robinhood's part. But I really can't comment. I will say this though. I use Fidelity also. With with regards to most of my trading is done via Fidelity. But Robinhood is like the like, it's such an easy platform to just go in and see what's going on. Fidelity is just a little clunkier, but it has way more options on there. Like, so it has way more asset classes that you can invest in. It has way more research that you can, utilize. So Robinhood is a lot more simplistic, but sometimes you kind of want simplicity too. You don't need to have, you don't need to take a jet to go to the next town over. Sometimes you just want to take a bike and that's it. So I think of Robinhood as a bike. So a lot of times I'm like, hey, I just want to quickly browse what's going on in the market. I want to see where everything is. And I could do that very easily with Robinhood. So,
Yeah, I agree. Big Billy says I sold you guys my 200 shares. JK. I didn't even get to watch the Dumb Money. You watched this, Chris, right? Did you like this movie, Dumb Money? Yeah.
I liked it, but there were some inaccuracies in there that they really tried to make like Roaring Kitty the benevolent good guy and all these other guys like complete assholes. And it's a little bit more than that. And the thing is, people don't necessarily want to admit to it. But as an example, like they made Seth Rogen's character really, really like this pompous rich guy kind of thing. And then same thing with what's his name from Citadel, Ken Griffin from Citadel, as this like, oh yeah, we're just gonna take money from these small time retail guys. Like, bro, no one gives a shit about retail like that. What they care more about is just making money, which is their core function. Same thing with Steve Cohen. It's their core function to make money, right? So if they see inaccuracies in pricing, they go that route. Now, do I agree that they were a little bit too confident in their trade? Yeah, absolutely. And they got their asses handed to them. So I can't blame that, but I don't know, man. It's just like, do you see ultimately the value in GameStop? Because I don't see it. Do you see ultimately the value in AMC? I don't see it, but some people do. So, it's just two differing opinions. And yeah.
I agree as well. Again, I think Robinhood at this valuation is incredibly juicy. I go on Robinhood 30 times a day. Yeah, I mean, the people that use it use this platform. So I think the test for Robinhood now will be expanding users across the pond. They're bringing crypto to the EU. Gold subscriptions are doing really well. And can they get the people that are, I mean, like TJ, friend of the channel, he trades with a couple $1 million in Robinhood every day. If I ever get that rich, I'll be using Robinhood, right? And so I think if people like me continue to grow our wealth and use Robinhood, I mean, I get 3% IRA, Roth IRA match, like, and I'm unemployed. So that's great for me, right? To have that as a service. The question simply becomes, can they really, really expand?
Correction. You're self-employed. You're not unemployed.
Yeah. I have my own LLC. It employs myself, right? So the ability to have that, like, I didn't know I could set up a Roth IRA. That it took 2 seconds to set it up, just incredible. Yeah. But they got to be able to get to more people. Okay, let's talk about HIMS. This is a company you and I don't know that well, but it is a big stock in the Twitter world. And I think we should definitely discuss it a bit. I just want to go through a couple of their numbers. And then I want to ask you a more broader question on if you think HIMS has them both. So HIMS, for those that don't know, is a company that provides health services in the forms of pills and like balding cream and all this stuff to men and women. It's technically him and hers, but the ticker symbol is HIMS. And I'm going to go on Brad's page and try to find the snapshot of it. And I mean, their earnings are amazing. I think they're growing revenue 50% year over year. Subscribers are growing very well. Stock was up, I think, 15% a couple of days ago on a really, really exciting quarter. Also, we should talk about Celsius. Celsius, this is one, Chris, we've missed like going deeper into it when you mentioned it.
This is the one time I should have listened to the wife. Like, remember I told you, like, we had the discussion that my wife was telling me about all the nurses at her hospital just raving about Celsius. And we had an episode, but you know what it is? It's like, this is the part with being too dogmatic with your investing. And this is actually been one of the reasons why I have never been able to like way beyond perform the market. Like I've outperformed the market, just not way beyond. It's because the dogmatic thinking that, hey, the valuations just doesn't make sense. The valuation just doesn't make sense. And at the same time, their growth is just on a tear, man. So I don't know what to say, man. It's just hard for me to invest in a company with valuations that stretch. Like, yeah, it's just, but then again, sometimes you just have to go with the growth.
Yeah. And we'll talk more about it, but Celsius just absolutely incredible earnings, and their Starting to get pricey up there, but they've done really well from 2020. So HIMS beat revenue by 2.9%, beat EBITDA by 3.8%. Still not profitable, but they'll be profitable by a penny next quarter if they get profitable. Subs 1.43 million. That's up 44% year over year. This is a subscription e-com business as well. So there's a little bit of SaaS revenue there. Or not SaaS revenue, but software. Well, yeah, it's a subscription, but it's not software. You're getting actual physical products. So there's a subscription revenue there. Revenue is up 56% year over year, 226 million, and average order value is now $99, which is up 20% year over year from $83 back in Q3 2022. Broad level, Chris, because I know you're not deep into this company. Would you invest in a company growing 56% year over year, supplying health tablets to men and women? Do you think there's any moat, or do you think they're just really good with their marketing and that's how they're growing so well?
I mean, there could be a moat. It's just, it's about branding and also about loyalty among its consumers. So, I'd have to do a lot more research on these guys before I really make a big determination. But I think overall, from just their financials, they're pretty good. They're growing rapidly. They're not terribly overvalued. So it's just something to, I would say, keep an eye on, especially if you look at their number of subscription growth. That's pretty damn good growth. So I was looking at them on an Altman Z-score level. Their Altman Z-score is amazing, and they're doing buybacks now.
Wait, hold on. What is Altman Z-score exactly?
So let me just show you what it is.
Did Sam Altman make that, or
no? It's it shows what the chance of a company going bankrupt.
Controlling the whole world at this point, right? AI,
Yeah.
He made the Altman Z-score. It's like it's his
yeah.
score.
So right here in the manufacturer, it's headed to bankruptcy. So it's a complicated formula.
Hold on, let me read the definition. Go up there. Altman
Right
Z-score is the formula for determining whether a company, notably in the manufacturing space, is headed for bankruptcy. Why does this apply to HIMS? Why is this relevant?
Because that's what they do. They manufacture these things and they sell them to the consumer, right? And they're at $1 billion valuation with negative net income. I think it's negative net income. I have to double check on that.
Yeah.
So you kind of want to see, like,
not profitable.
Yeah. So it's like, are they going to make it? And it's, like if you look at them on a Altman Z-score level, let me just see. Hold on.
Did anyone know in the chat what was Altman Z-score? Be honest. I can't be the only one who didn't know what that was. Do they sell Viagra? Yes, they sell erectile dysfunction stuff, Viagra, all that stuff. They do all that good stuff.
It's like close to 11. Their Altman Z-score is like close to 11. So you can see here that usually in anything that's above like 1.8 and 3 is good, but anything that's lower than 1.8 is like a distress level. So they're good. They're not going bankrupt anytime soon.
Okay. So overall, do you think they have a moat or no?
I see a lot of competitors out there, but I see a lot of competitors. So I don't know. I can't say. I like nothing that they sell isn't sold at your local pharmacy or with other companies that do the same thing. But the uniqueness of their products, maybe subscription model, I don't know. Like I have to do way more research into these guys before I can say like, hey, there's a moat around it or not. Okay. Hey Rango, it's been a while, man. What's going on? How are you?
Yeah, Rango, we need you on the pod, buddy. We got to get you on again and discuss. He said a nice thing about Palantir the other day when Palantir had 19. He was like, I really respect the community. So thank you, Rango. And we got to get you on. Definitely get your updated thoughts on Enphase, what you're thinking about Tesla. We got to get you on soon. It's just me and Chris today. So I'm going to put the link in the chat if anyone wants to join. We'll talk about another stock and then someone join with us because I guess Carlos is definitely asleep. VITALY couldn't make it this week. Next week, starting 9 p.m. Eastern. So remember, 9 p.m. Eastern, we will be back. And we'll have VITALY, the four amigos, will be here every day. Okay, Uber. I want to discuss a little bit on Uber. So let me pull up them as well. Their stock is stuck in this $47, $48 range. I think Uber was a steal at that 50. I think when you were buying it, Chris, like 22, 23?
20. Yep.
And
me and Sean both.
You and Sean, yeah.
Yeah.
You and Sean both bought a revenue of $9.29 billion, year-over-year growth of 11%. Bookings $35 billion, which is just insane. Year-over-year growth of 21%. I believe this was their second quarter of GAAP profitability. So they are now 2 quarters in, finally GAAP profitable after being public since 2019. They missed revenue by 2.5%. Stock was basically flat. Company's worth $100 billion. They went public at basically $100 billion. So unless you bought during the COVID dip, you really didn't get any returns from Uber. Any updated thoughts on this business? Are you excited about this at all?
I mean, you know, they're still, let me just share my screen real quick. They're trending in the right direction. That's the key to remember here for the company like this. You can't just base can you show the screen real quick?
Yes.
Yeah. So this is their operating income. It's been improving over time, and this doesn't go in September, but this is the key to remember for any good business, right? Whenever they come out, they typically have these shitty operating income numbers, but then over time, as they get better, they scale up and they get more efficient. They start generating operating income, and using that operating income, they have a lot more flexibility to do things with it. So, like I said, invest back into the business. You know, do acquisitions, buy back shares, issue a dividend. All these things are what generate shareholder value. So if the company is not generating operating income, that means that the business does not have that ability to do that. So you can see here from an operating incomes perspective, they're still losing a little bit of money, but if you look at their cash flows are improving. And their cash flows are growing materially. So it gives the business optionality to do more things. So this is what you generally want to see in a company. You know, their free cash flow is growing. So the question is, what are they going to be doing with that free cash flow, you know, going forward? And as that free cash flow keeps piling on, you know, it just means that the company has the flexibility to keep investing back into the business, you know, and maybe even buy some shares back. Who knows? Like I said, once again, this is another one that has been a fire and forget for me. So it's just been buy it, just hold on to it, look at it in 10 years. I don't think Uber is going anywhere. They have a huge moat around the business. And at the same time, some of their competitors are not likely to survive going
Really?
forward because,
You think Lyft has no shot of making it out?
well, let's take a look at their numbers, you know.
Because I was using Lyft a lot in Vegas when when the Uber fucking thing was trash.
Let's see. Let's look at
So I
Lyft.
had to use Lyft. Uber is a beast. We got people who like Uber in the chat. Rocket Labs did report today. We can check that out. I'll put the link again, guys, if anyone wants to join.
Yeah.
StreamYard is in the chat.
Now,
All right.
compare this is Lyft's numbers. Compare them to Uber. You can see here their operating income is actually kind of gone. It's improving a little bit, but it's still negative, right? And then on a cash flow basis, they're still burning cash, right? And actually, their cash burn actually went up last quarter. So this is not good. You typically don't want to see this. You want to trend this way and it keep going this way, like Uber. So if let's say something happens to Lyft and they go bankrupt, what do you think that means? I mean, look at their free cash flow. They're burning cash. How long can they survive while they keep burning cash? Whereas Uber, they don't have to worry about that. So
okay. Ladies and gentlemen, we have someone backstage who's with us. I'm so happy this person joined. This person is someone I really love. I'm happy he's here. I'm happy he's going to talk to us for the next 15 minutes. And he joined, ladies and gentlemen, the new man who's taken over financial Twitter, Roy Crossroads. What's up, sir?
Hey guys, good to be on with you. Love you guys too, and you love the show. Glad I could catch you at a time where it's like, hey, you could use an extra person for just a couple minutes. So
absolutely use you. What's up? What did you want to talk about? Is it fintech related?
Always PayPal, but no, it's it was more a question of macro, and I'm not great at macro. And one of the things I like about KRIS, he always shares his thoughts. And Amit, I'm sure that you have thoughts as well. But do you think that we're going to get? So I guess to put a premise on it, I'm in Robinhood. I think Robinhood, like at the current valuation that it trades, it makes sense, you know, long term. Like worst case, it's going to probably be an opportunity cost. And of course, if we get I think that it'll rise anyway. But if we get a bull market or we see the crypto halving, and so we have the that cycle play out, I think it'll do phenomenally well. So, and of course, those are the two big catalysts. So I'm just kind of curious, either of you guys, do you think that we're going to get a Santa rally this year? And also, I was curious if, like, what do you think as far as the macro of next year? Are you still seeing some upside in the market?
Well, let me give one stat. I'm going to let KRIS take this one to start. This is what I found out today. As of November 2nd, remember those money market funds that had 5.5 trillion in them? That increased by 62 billion. So now there's 5.7 trillion in money market funds that is not in the market, but the stock market, the S&P 500 went from 4,100 to 4380. So stock market's up 5-7%, but more money still in the money market funds, right? So it's just really interesting to see people still be afraid of the market, but the market's rallying. When is that money potentially going to shift, and or maybe that money can continues to stay there and collect that 5%? So Chris, where do you think Santa Claus is coming to town, and what do you think about 2024?
Yeah, I think so. Mainly because I think the inflation numbers are going to point towards a deceleration in core inflation at a much more rapid clip than a lot of people are thinking. And I think the market is forward looking. So what's going to happen is the market's going to say, oh my God, look, inflation's coming down, and it's coming down really fast, which means the Fed is going to, cut rates sooner than we're expecting. And so I think a lot of people are banking on that. And I mean, I'm banking on it, especially. So I really do hope it happens. But I think we do see a Santa Claus rally. And if we do get a recession, which I think at this point is pretty much guaranteed, but the extent of that recession is not going to be a deep one. So I would say the people that can weather a couple of quarters of bad numbers, they'll be fine. Like, you might see a pullback, but nothing that would like make me go, oh my God, I need to sell everything and sit in cash for the next year or two. Like, this is not the 2008 that, a lot of people are expecting. This is more like, hey, we're going to get some contraction, the impacts of the credit contraction, the impacts of the interest rate rises are going to start being felt more, so these things are going to play into our brains. You might see earnings start to miss a little bit for a couple of quarters as consumers kind of pull back on spending. So these are kinds of things that we're likely to see, but nothing that would change my long-term positive outlook. I think 2024, the second half of 2024 is going to be exceptionally well. And I think this year, Santa Claus is coming. I think the numbers are compelling.
I love this.
Today
was
was
Chris Kringle.
Yeah.
This is
Yes.
hilarious. Are you Santa Claus, Chris? I
hope so. I hope for my Patreon people I am, man. We were loading up on Google, baby, so I hope so. I want everyone to have a great Christmas this year.
Amen.
By the way, I'm going to do something special for all the Patreon people. So I don't know how I'm going to do it. I was thinking I gotta talk to the wife about it because she's going to help me. But it's going to be a lot of I'll talk about it on the Patreon. So yeah.
Yeah, that sounds awesome. Yeah, I don't know. It's a hard to read market for me, and I'm not good at this sort of thing. So I really appreciate those thoughts. What do you think, Amit? Is Kris Kringle right?
I would just say, Roy, just focus on the 10-year. Look at the 10-year treasury. The 10-year treasury
again, yeah.
Yeah, the 10-year treasury will tell you which direction we're moving in, when it comes to this inflation, right? The bond market is very intelligent. It can tell you what's actually happening. So look at what happened in the last 5 days. This is crazy. This is a big drawdown in inflation and in 10-year. Literally, it went from almost 5 on in October 20th to now almost losing 500 basis points of yield. That's a huge amount, companies that are typically, there's a category of companies that are worth looking at right now because they will do exceptionally well in a lower yield environment. So, that's what I'm investing in.
So on that, I ended up selling out of Enphase completely. I only had a 0.5% allotment. And I was I was down, and I'm like, it's not the right time for it. Not a huge amount of loss, but I'm tax loss harvesting. I'm going to put that in, actually mostly PayPal, some SoFi as well. I had more conviction in those. So I still like Enphase, in the long term. But with something like that, I'm curious, when market's always forward looking. I think it might take a while to play out. Interest rates are still really high, even if they're coming down. When might you look for something like Enphase or Tesla getting more momentum as the interest rates are coming down?
It's an interesting question. So the idea is when interest rates finally come down, will growth... Well, here's the question. Do you think growth stocks take a understanding that interest rates are starting to come down because the signs become obvious for whatever reason they are, and they start to rally before that cut actually happens? Same with regional banks, any company that's affected by them.
Yeah, I think so. It seemed like we got that a few days ago in the market. Whatever that large up day was, it seemed like, based on the Fed speech, that they had just said, you know what, either the Fed doesn't matter or it's a pause. we're going to the moon today. And we had that amazing week last week where it was to the extent somebody had posted this on Twitter where if we had a second week, which we're not getting that this week, but if we had a second week that strong, the VIX would be down below 9. So it'd be like the lowest it had ever been since like 2016 or 2018, just something ridiculous. Didn't happen. Didn't think it would happen. But yeah, there's no other reason I could tell other than just, yeah, deflation's starting to come. Things are settling down. Interest rates will have to be cut at some point. So
the one of the metrics that I'm not sure a lot of people are talking about that actually worth taking a look at also is this one. Hold on one second, Amit. Let me just share.
By the way, let me get another guy who's backstage with us. Zocold. What's up, brother?
Hey guys, can you hear me?
Yeah. What's going on, Zo?
Nothing much. How are you guys doing?
Good.
We are doing good.
Hey Roy, how's
Before
it going?
KRIS goes, I'll
Good,
pose
Zoco.
the question to you and get any thoughts you have. Do you think that Enphase can recover, Tesla can recover as interest rates get cut, or do you think it's really a long-term demand problem that is going to take some time?
Oh, are you asking me?
Yeah, I'm asking you if you have any thoughts.
Sorry. For me, Enphase is a long-term hold, like Carlos and Vitaly have been saying. I'm not in the short term, due to those interest rates, like we all know already. I don't think it's going to do well. But if you have a strong conviction in it, long-term, I think it will be fine.
And you have Enphase, right? So cold. You've been in Enphase for a while?
Well, I had one share of Enphase, but I actually bought a little bit on this dip. But just 9. So I barely have anything. It's like probably less than 1% of my, portfolio. So
Okay,
I'm just
Roy,
like, kind of like, huh?
I was
That
going to
was
say
like
Roy was
Yeah,
in
yeah.
the same position, but you just sold
it
out.
was a small, and it was like 0.5% and went down to like 0.25% because it fell so much. And I'm like, all right, tax loss harvest. We'll keep it on the watch list. I'm still bullish, but it's like, I want to load up.
I didn't lose anything on it. I'm just holding like about 10 shares. So
Yeah.
But I mean, it's a win-win if you're tax loss harvesting. So
Yeah. Had those Palantir calls gains to offset, So
All right. So
is that the little ones? Are they here?
One of the little ones. Jackson's.
Hey guys.
Like, going
What's
crazy
up,
over
guys?
me, so
I
he
just saw your dad in Vegas. We had a great time together.
Say hello.
Mhm.
Hi.
Hello.
This is the youngest one, Zora.
Hi, Zora. How are you?
Say hello.
Do you
Beautiful
like
name.
the stock market? Are you interested in stocks at all, or you don't care?
No, I don't care.
Don't worry, we're gonna make you care. We're gonna get you early.
Yes, that's the plan. That's the
It's
plan.
boring.
I know it's boring. for
Boring.
you.
Okay,
All right, go hang
you're
out
kind
with
of right.
sister.
We're all okay. KRIS, say what you were gonna say about the Enphase thing, and then we'll get to Zocold's question.
No, I wasn't gonna say anything about Enphase. I was just gonna say the 30-year mortgage is actually starting to come down, which is good because there's a lot of people waiting on the sidelines to buy homes, but there's also a lot of people on the sidelines waiting to sell. So as the price of, as mortgages get cheaper, that means that people will actually start to, go back into the housing market, which should provide a tailwind in terms of economic activity in the future. The one thing I will say, this is not financial advice. I would hold off on buying a home for a little while. I would wait primarily because there's going to be this rush of people saying, hey, I want to buy a home and the mortgage rates are starting to make sense now. I'm willing to give up my 3% or 4% mortgage as long as my mortgage is like a 5. Like, I don't mind paying that additional 1% if I have to buy a new home because I've had some family changes. Like right now, people are so protective of their 3 and 4% mortgage rate that they're not going to be willing to move at all. So they're willing to travel like an hour and a half for a job each way. But if you're telling me that, people can live with that forever, it's, life throws shit your way. You can't always have it your way. Sometimes you get a better opportunity for work at another place and you need to sell this home and buy a new home. So a lot of people have been holding on to inventory. And I think with interest rates coming down, that inventory might start swelling up. And if that inventory swells up, that means that there'll be a little bit more price discovery in the housing market, depending on which area you live in, and we could see a downturn in the overall in the price of housing. Plus, there's a lot of inventory of rentals coming on, so there's been a huge issue with affordability in housing for the last 2 years, and I think slowly we're starting to see that kind of reverse. So if we do get a crash, I don't know, it's going to be really bad, but hopefully the Fed is smart enough to kind of just, you know, do this in a way where there's like a nice, steady, you know, return back to the normal, as opposed to just housing markets just crashing on us.
Yeah, and speaking of that, by the way, and just real quick, I used you do a lot of data points on the mortgage rates and everything and real estate, and there's several others too that do that. I've been tracking that, and I'm actually flying out Friday for a in-person job interview, which should be a substantial promotion, and so we may be selling this place. And I've convinced the wife to rent. And it's like, we're going to rent. We're going to, you know, at least for a year. I think we have to anyway, just realistically. But yeah, hoping that it plays out just like you said. So from your mouth to God's ears, please.
Okay, Zocald, you can hit us with your question.
Oh yeah, so I was at work earlier this morning, and I guess I wasn't paying attention to the chat, but there was a comment about Google like spreads going upwards, and so I was like, oh yeah, just everything I need them to chill because I want to average into the Google spreads. And so you said Verizon, Zoe, Verizon. So I wasn't completely clear on what you said. I was curious as to whether you were referring to just buying shares of Verizon out flat or ignoring Google. I wanted to know the specifics behind the comment.
I'd say probably right now, Verizon is a great play in just plain stock. There was some really, really juicy opportunity, like literally like 3 weeks ago before they put their earnings out, where their options were just trading at banana republic lows, bro. They've doubled over the last like 2 weeks.
Yeah.
So a lot of people have been asking like, hey, am I too late to get into the Verizon spreads? I don't necessarily think so, but I see that from a risk adjusted perspective, it's probably better to be buying just the stock and collecting the dividends. Like, you're getting a nice 7.5% juicy dividend. Cash flows are really strong in this business. They're not going anywhere. The yields are coming down, which means you're probably going to see people start chasing yield. That's the key, right? Whenever you have these dividend aristocrats that have been paying for the last 17, 18 years, and they need to get that yield, they're going to say, hey, I could buy Verizon. And not to mention Verizon, unlike the treasury, your yield every year as the business does more grows. Like, the dividend does not stay flat. And I think this is one of the things that a lot of investors, they'll look at a company and be like, well, this has only got a 2% dividend or a 3% dividend. Why would I want to buy it? But if you look at over time, these guys tend to increase their dividend every single year for the last 20 years. And so if you're able to average into Verizon at such a cheap price right now at 7.5, and they keep growing that dividend over the next 2-3 years, it's a great play on income. So I would say in terms of valuation, Verizon is very undervalued for historically. Going forward, they're going to be cutting back on a lot of CapEx that they spent to do their 5G transition, because everyone had to do it. Like, that's how it works. The next generation of, you know, technology comes out, they're going to have to spend the capital to do it. They're cutting back on that, and they're going back into maintenance CapEx mode, which means that it leaves them a lot of free cash flow to do other things with. One they're going to do is delever. The other thing they're going to do is increase dividends. And the last thing is they're probably going to do share buybacks, in which case Verizon could get back to its $55, $60 range in a couple of years. So imagine right now you double up on your money, and at the same time, you're collecting a nice, healthy dividend that you can use to reinvest or to do other things with. So like I said, I think Verizon at this point is a no-brainer, in my opinion. So, you know.
Thanks for the explanation. Yeah. So yeah, I'm definitely, I'll be a little bit more aggressive with accumulating the Verizon shares. I'm not versed in options like you are, so that's why I'm just literally just following your lead. But for sure, I have some already, but I'll definitely continue to accumulate the Verizon shares. Thanks for that.
Nice.
Yeah.
The dividend's what, 6% now? It's a little bit
below 8. It's 7.44 according to
one
today.
of the highest dividends in my dividend or my wife's dividend portfolio. So yeah, it's pretty dope. Right. Thanks, guys.
Absolutely. All right. So I think that's it for the pod for tonight. We're gonna end it with you guys on here. Today's Wednesday, so we got one more pod left of the week. Tomorrow will be Thursday. Earnings has been kind of crazy this week. We went through most of the big earnings. I think ARM reported today they're down 7%. They had their first earnings as a public company. We could talk about them tomorrow. But yeah, outside of that, that's pretty much it.
Blacked out.
Hey, Chris, don't laugh at me, Chris. Don't fucking laugh. It's 1080p now. I upgraded StreamYard, so there's a purpose to the 4K.
It's not okay. You have to like on the camera, not shoot in 4K. All right, just.
But dude, it comes
overheats.
out good now because StreamYard's 4K.
No, it's not. It's still 1080p or whatever, man. I'm not.
No, the great thing is, look at the clarity of those fake bricks. Like they just
No, hold on, they're not fake. Okay, they're not just because this.
You know,
I
someday
took
he's
a
gonna
piece of the
have to
brick
get
out
real
right there.
bricks. At this point, it's like, come on, Amit, bro, you're at 25K subs now, man. Congrats on that, by the way. We didn't
Dude,
really
20
get a
if
chance.
I had $1 for every sub, maybe I could fucking fix the bricks, but as no.
Come on, all your
All right,
volunteer
guys.
gains. Come on, bro. Invest in a better setup.
It's just so funny, because the first like 30 videos on YouTube was a blue background. It was so bare, like it was just.
I still
empty.
remember
And I-
seeing your mom's bedroom, like bed in the back. Like you used to
Yeah.
do it in your mom's
Yeah.
bedroom. You know.
Yeah, and then I put up the bricks, and everyone was like, "Oh, this is cool, but are they fake?" I'm like, "No," and then it just turned into this thing where it's like, "Yeah, they are." I'm like, "No, they're not." They're like, "No, the bricks are." They're like this wallpaper. I'm like, "No, it's real," and it just became this like stupid back and forth. But
You know how you can tell that they're fake? It's very easy to tell.
how?
The lines. Look at the lines. You didn't even line them up. Like if you go to the back, you can see the line and then it changes. Like tell me one real brick wall that does that.
He's a
Dude.
background imposter.
Yeah.
Dude, my mom came into the room in 2021 December when I put them up, and she got so angry. She's like, "Why didn't you tell me?" She's like, "I would have helped you line them up correctly." And I'm like, "No, it's fine. Like no one's gonna notice." And then every comment, the first video was like, "What is wrong with those bricks? Like what is like?" It was like
Let me show you something real quick. This might actually help you. Hold on 1 second. This is what you need to get. If you really want real or fake pseudo bricks, you can just get
By the way, we got the ARC. We got ARC. All right, ladies and gentlemen, real quick, Chris, before I show that, ARC buys 888,000 shares of Robinhood in
Wow.
ARC-KK, 152,000 shares of Robinhood in ARC-W, and 99,000 shares of Robinhood in ARC-F.
She bought the
She's
dip.
a little bullish.
Yeah.
It's easy for me not to buy Robinhood. I just don't have that conviction for it.
That's fair. That's
And,
fair.
and they're sneaky. I feel like they're sneaky.
They are
But
sneaky.
I hope
like Vlad,
it 10x is for you.
I hope so too. That'd be awesome.
So Amit, this is what
You want me to
need
go to
get.
Home Depot again? I was a man. I went there on Sunday.
This is
You
all
want me to
you
be a man
this is
again?
all you need. Like literally it's you just paste them on the wall. All right. And it makes it
Why
look
didn't
like you
tell me
actually
about
have
this 2
two
years
bricks.
ago.
See?
I wish you told me that. That seems so easy. Wow.
Well, this one's wallpaper. That's not the one you want. You want the one that's like textured like this. You know, that actually has like
Upgrade the background, Amit.
Yeah.
You might need to do it.
It might
bro.
actually help with your soundproofing too. You never know.
Yeah, that's true. All right, everybody. Thank you for being here. We'll be back tomorrow, 7 p.m. as usual, and we'll finish out the week.
Thanks, guys.
Thank you,
Hit the
everybody.
like,
Thank you guys
good
for being here.
people.
Appreciate it. Have a good one, guys. Good night.
Peace.